let's talk about gold loans. While loans against gold has been a more traditional lending model that has largely been dominated by the unorganized market and some NBFCs, we're seeing more attention being paid by venture capitalists towards getting the Fintech revolution going in India to cover gold loans as well. There are a clutch of startups now that have concentrated on making gold loans quick and easy. In fact, our first guest today on Startup Central is the head honcho at the gold loan startup, Rupeek Fintech. The CEO of the company, Sumit Maniyar, is joining us from Bangalore. Sumit, great to have you with us and congratulations on raising this fresh round of funding of $30 million. I understand a round that is led by Benny Bansal, GGV Capital and KB Investments. And I just want to understand from you upfront how you intend to deploy these funds that you're now raising.
Sure. Good evening, Vikram. Thanks for having me here. The fundraiser is for building distribution, investing in technology, getting deeper lender integration with our banking partners. And a lot of this would go into building brand. This is a particular category where brand will play an instrumental role in building a foundation of a rock-solid business.
Fair enough. But just to backtrack a little bit, Sumit, you started the business of giving out loans against gold jewelry and heirlooms back in the year 2016. You've expanded your presence. Now you're in 10 cities. And over this period, you've got the financial backing of some of India's largest banks. And the latest, like we mentioned, a round of funding that's led by Flipkart co-founder Benny Bansal's B2B Ventures. So if you can just give us an indication of the valuations that you're working with for Rupeek and the funding journey, the way it has panned out so far since inception.
Sure. Just a minor correction. This is Benny's personal check, which he has put from his personal money. The valuation range, given that the sensitivity around the non-disclosure part, you can assume, put a guesstimate to it. It's a typical Series C valuation. The end usage of plan, as we discussed now, the next step for us is to sort of add more diversified sources of capital, build a robust engineering tech stack, and essentially take the current disbursement of 200 crore per month to a 2,000 crore per month, hopefully in next 18 months.
So Sumit, over this period, the one that I'm talking about when you started in 2016 to now 2020, I'm wondering what the biggest challenges you faced in growing the business, because the times have been not the most conducive for any financial business. We've seen how the NBFCs have bled. So walk us through the most challenging bits that you've encountered through this period.
Sure. Fortunately, the category we operate in, it has been relatively more, I would say, easy to work with. The reason being it's asset backed, it's highly fungible, high quality underlying collateral, which helps us, get the comfort for the lenders to work with us. The biggest challenge in the initial days was to find the product market fit on the lender side. And I guess the next challenge is to extract profits out of the journey we have accomplished so far.
Still, Sumit, you compete with the likes of Muthoot Gold Finance, but you've kept your business online, and that's very crucial. Tell us about the thought behind the business model you've created, how unique it is to anything else that exists in the gold finance business in India today.
Oh, that's quite unique, Vikram. So if you look at, in today's age, people are paying 25 to 30%, and in some cases, even more yield on a highly fungible asset class that is gold, which probably you could argue is better than $1 today. And in such a high quality asset class, people are paying through nose to get a credit access. If you look and dive deeper into the reasons, there are three primary reasons. One is the physical distribution, execution capability, and there is some regulatory arbitrage, which all these three put together, the NBFCs had an edge over the banks, or a pawnbroker, unorganized market had an edge over the banks. Now with technology, what we are telling is that we do not require brick and mortar shop, and we can do doorstep gold loan. And in the process, because we are able to add transparency and convenience, a lot of our customers love us. We see tremendous repeat rate. As you can think and imagine, the gold loan is a OD product or a credit card product for the self-employed borrower and a lot of salaried class. So, and this is an asset class which unfortunately is very underutilized. One thing which we have got right, I hope we have got right, is that the lot of first-time borrower are coming to us because of this business model. in this business model, we go to customers' doorstep and do the entire transaction in the privacy and comfort of their home. And the result is that we are seeing tremendous first-time borrower on the platform, especially from the northern Indian segment, which typically were never gold loan users. So it just goes beyond the existing market. I think here the market itself is expanding, and that's pretty fascinating and exciting journey to be part of.
But Sumit, when you look at it in real terms, when you compare it to offline businesses within the gold loans space financially, if you make that comparison, what are the kind of savings that you actually make by adopting technology, of course, which is a prime investment for you in any case?
It's a huge one, Vikram. So for end consumer, the loan is about 25 to 40% cheaper as compared to the offline incumbents. So that kind of money they can spend on health, they can spend on education, or just on consumption smoothing. I think the bigger cost structure which was there in the NBFC P&L was setting into this brick and mortar inefficient use of employees. Because remember, some of these largest gold loan NBFCs are distributing gold loan from 4,500 outlet or thereabout each. And a lot of this cost, in fact, a majority of the cost is attributed to just gold loan. So naturally, the product you have to price to earn a decent ROA is going to be very high, which is again borne by the end consumer. They don't complain because unfortunately, this is still the cheapest form of capital available to them. So in a way, the technology and product, what we are adding to the system is enabling efficiency. And this is just the starting point, because what we see is that in the middle of the pyramid, we are able to generate massive amount of proprietary data, which is quite honestly not even available with the banks they're partnering with. On top of this data, our hope is in that couple of years, we'll be able to underwrite and sort of give out loans which are unsecured in nature to the customers who are never banked or semi-banked and definitely not having access to credit from formal sector.
You know, when you actually started up in 2016, you were funded by Silicon Valley venture capital firms, Sequoia Capital and Axel. That's great backing. In fact, you can call it blue chip backers. From then to now, tell us how you go about convincing venture capital firms to come on board, the kind of pitch that you make, and how has the pitch changed in this round of funding as well? What did you have to do differently?
Fortunately, not much. I think the investors were kind enough to evaluate and hear our story very patiently. One thing which we did very cautiously was to look at the high quality name from angel investor to all the investors, and we were fortunate to build a consensus. We just mentioned about the large problem which is out there, which is not addressed by any of the players. If you take banks, they have their own limitations in terms of turnaround time. If you take NBFCs, the cost of capital which they offer to the end consumer is too high. And unorganized sector, I mean, the cost is obnoxious while they give the comfort. So what we brought to the table was sort of amalgamation of all three. And the market, the opportunity to create a dent in the ecosystem was pretty large. So of course, it was not a cakewalk in terms of convincing these guys. But fortunately, we stayed in touch, and after a couple of conversations, they built conviction on the team, they built conviction on the business model, and more credit goes to the market than to me or the team. Of course, we have played our parts, but it's a fantastic market to be in.
Well, it clearly is, and which is why you've been able to have a successful funding round as well. But at the heart of any business, Sumit, is product innovation. The key is to make your offering better, more unique than anything else that's out there. So in terms of product innovations for Rupik that have driven your business ahead, what would those be?
Sure. I think I truly respect firms like HUL, which are heavily customer insight driven, and how they are able to capture customer insight and translate this into product innovation. So what we have also done, and we are in the process of building, is a distribution of our core business, which is the Doorstep gold loan, but also play around the adjacencies in gold loan, where we have just launched a gold-backed overdraft facility, where you can store gold ahead of time with us, and on tap of a button, you can unlock this credit access and take it into your bank, and you only pay to the extent of the credit you are using it. Now, this might seem very small innovation, but what it enables for a self-employed businessman is to truly optimize and pay for the cost which they are borrowing. So in a typical gold loan, they would have to take, say, a 5 or 6 lakh rupees worth of gold all in advance. Whereas with us, they can keep a certain worth of lakh of gold and then keep on borrowing on top of it as and how they require the need. This product is doing phenomenally well. Early days, but these are the kind of efficiencies we are trying to drive adjacent to gold loan business, core business.
Did mention consumer insights, Sumit, and that's very key in anything that is related to consumers. You've got to know your consumers well. What have you learned from the kind of consumers you've had and the ones that you hope to procure in the future? What are the reasons that are driving loans against gold these days? And what are the demographics that you're looking at? How are they changing these trends? Are there anything that you've noticed has changed among the kind of loans being taken and how the consumer is looking at gold loans differently?
Sure. I think, in the current scenario, if you were to look at how gold loans are being consumed, primary, I would say 50 to 60% use case would be a working capital loan requirement where a mom and pop shop guy, a kirana store owner or a furniture molding workshop or a caterer, these kind of businesses would be borrowing against gold, primarily using for working capital requirement. The same guy might end up using for a medical emergency or education loan for the kids. And there is a salary class which we are seeing now, employees of top tier e-commerce companies, banks, US investment banks. These guys are also taking gold loan through the model, which never happened before. And the use cases are very interesting, from a down payment of a house to going out for MS education and their student loan has not been approved. So it's a mix of consumption smoothing in the salaried class, primarily the consumption smoothing, and for the self-employed borrower, I would say it's a business capital, working capital loan as well as a consumption smoothing loan, which also helps us because it makes the loan book a little bit more diversified, more immune to cyclicality in the business. In fact, from the times we have been seeing some softness in the market where the other credit access have sort of slowed down, we are seeing an uptick in the gold loan demand, which is naturally good in the near term, but not so great in the long term, if the economy slows down.
Yes, absolutely. And besides the consumer, Sumit, knowing them well is one part of the story. Of course, you need to control costs. So I'm just wondering on customer acquisition, how you've been able to go about it, keep those costs low. And also, when it comes to further investments, technology is something that you've got to keep investing in. Fresh investments over there because you've got proprietary hardware going. So when it comes to the overall cost picture, which are the biggest drags currently? Which ones are the buckets that you will try to control going ahead?
As any business, the building a brand is the biggest cost item, where acquiring customers at a at a very high pace, and typically all startups go through cycles of inefficiencies in the initial days, and that is the biggest cost center probably for us today. In terms of operational efficiency, sure, there is a lot of room for improvement, but we are doing fairly okay there. The third biggest cost item for us is the more on the nature, where corporate costs, we have to keep that also in check. All these efforts are going to be the plan of our next year's annual operating budget, which we put out. But the key here is that we have found a very unique problem in a very large market. So our focus would be to get the margin profile right, but more importantly, to double our volume every couple of quarters on a consistent basis.
You did also mention maintaining a competitive edge, and technology is the key driver. So, of course, you're going to put in that much towards technology. But besides that, for a larger market share, what exactly do you need to do? How is that looking, your market share today in the gold loans business in India?
We are scratching the surface of a very large market. So it's even in the older cities where we have been operating in, will be just touching double digit in terms of market share. Which is not too bad for a young startup, but clearly, given the value proposition, it can grow significantly higher from there. The key focus here is to get the technology piece right, where we can launch into 100 cities by 2022. The idea is that we take the distribution play across India and make Rupik a brand for every household, every single household, because again, you can build variety of products from a credit card or a debit card on gold to overdraft facility to a doorstep gold loan. This all is tied together by three pillars, which is tech, the product, and the brand play. And orchestrating this through human capital operations and building a very robust leadership team is sort of a job of the initial team members at Rupik.
Yes, indeed. And before I let you go, Sumit, tell us about the expansion plans, the kind of targets that you've set up and at a broader level in the kind of direction that you see your startup growing.
Well, I think the good thing is that any number we have put on the board from last couple of quarters, we have been just beating that. To put it in perspective, last year, same time, we were at about $2.5 million disbursement. Today, we are at $28 million disbursement monthly run rate. My sense is that if we were to keep on growing at this rate, we'll probably cross the elusive $100 million a month in 18 to 24 months from today. The idea is pretty simple: to just focus on the internal culture of the company, make sure that we build it for not just 1 or 2 years, but 5 to 10 years. And what playbook we have discussed in a couple of the older cities, we just replicate and fine tune it with using the technology play. It's that simple.
Well, you make it sound simple, but clearly, I mean, there are challenges ahead like any business has, and we wish you great luck for that. Congratulations again for your fresh round of funding. And of course, we'll be monitoring all the moves that you make. We hope to have you again in the future here on Startup Central. Thanks very much for joining us.
Thank you.